Yo, what's up, guys? It's your boy Looney. Today, I want to break down 3 investing lies that people still believe. And I'm not going to lie, I fell for one myself. Let's get into it. But before we get into this video, quick shout out to the Discord. It is free to join. And then I also offer a premium membership that's $8 a month. And that gives you access to one-on-one coaching, trade callouts. I have an option selling course. I do giveaways and more. You can check it out. All the links that are in the description. But what is today's first lie? And that is selling options is flawless. So you might be seeing online everywhere that selling options is free money. Selling puts, selling calls, collecting that premium, there's not really a real way to lose. And yeah, when markets are choppy or sort of trading sideways or slightly bullish, it does feel like the perfect strategy. But there are times where it can go wrong. So with the market ripping higher, my covered calls are actually really struggling. They're starting to turn into a headache. And me, myself, I am learning that mistake. So let's look at Riot, for example. So I own Riot. It's one of my biggest positions in my portfolio. It takes up 27% of my portfolio, and I'm actually up 71%. But on the other hand, my covered calls are so deep in the money that it is mitigating those gains and really limiting myself. So I have a bunch of covered calls, and if you don't know how covered calls work, I have a bunch of videos on that. But a short description is you're collecting premium and you're basically setting an agreement that you're okay with selling the stock at those strike prices on that expiration. But myself, I like to roll them. So I'm constantly having to roll them up and out. And sometimes I have to pay for it. So if we look at this Riot $13 call, it was a roll and I had to pay $200. It is showing a realized loss of $1,200, which is a lot, but it's not taking into effect the new trade. So when this new trade goes through, or if I roll it again, my realized loss will be that 200 or net that 200. So I'm not really concerned about that number, but it is costly with that $200. I had to pay it from my buying power just to keep my shares and roll them. I think Riot is a good stock and I want to keep these shares. I don't want to sell them at $12. I want to sell them at $16, $17 when I have 100% gain. So I need to roll them to catch up to that. And I'm hoping we see some volatility soon and my covered calls have some breathing room. But on the other hand, is when the market dumps, sometimes cash secured puts can trap you at higher prices than you want. So let me actually pull up an example with Mara. Because I sold options on Mara and other stocks, but this one I'm still negative despite getting these shares at a cheaper price. So I was selling options all the way from earlier this year until now. And I got assigned, I don't know the exact date I got assigned, but you can see my assignment was costly. My average cost is 16.42 and I'm still negative. So even when you sell options, the stock can drop so significant that you can end up just being negative on a long period of time. And what I'm doing to manage this is I am continuing to sell puts on it, sell covered calls. You can see I have $4,000 in cash collateral for Mara if it drops to $14, $13, $13.50. And I'm totally okay with owning it there because it's lower than my average cost. And for that to happen, the stock will need to drop pretty significantly, which I'm okay with that sort of volatility. But yeah, when the market kind of goes against you is really when you get hurt, whether you're doing the bullish strategy or the bearish strategy. So if we look back in April, I was really hurting. Even though I was selling options, I was deep in the money and I was deep red. And I was down almost 20% at one point. And the way I got out of it is I just continued to sell options. And I actually started to mix in some buying options plays. You can see here, I have a SoFi debit spread to catch the upside. I have a Riot long-term leap call. I have a SoFi long-term leap call. I'm also running covered calls on those, and that sets up a poor man's covered call. That's a little bit more advanced, but that is a strategy I'm utilizing. I'm also having a debit spread on the put side for Riot, just in case we do see volatility or this bull run is sort of over. And I'm doing other ways to hedge as well, but I'm really trying my best to catch any sort of direction. So towards the upside and the downside, because selling options does kind of limit you in a sense where you choose prices that you want to buy at, Whereas if you bought and hold, then you can kind of be more in control of what price you want to get into. And for example, something like HIMS is something that I'm just simply buying and holding. And that's just because I don't really want to sell options because it would take up a lot of my portfolio to do that. And I don't want to lock up all that cash. So this is one where I just simply bought dips, or I'm just buying shares at lower prices. I'm up 28%. And I have 68 shares. Similar thing going on with Hood. I'm just buying daily buys every day. This is a smaller position, but I'm up 61%. So sometimes buying and just holding does work. Sometimes selling options works. You have to be really strategic when you want to choose each strategy, or if you want to mix in both. I like mixing in both. I do plan to continue selling options. For example, with Mara, I did a different approach. Instead of doing 2 covered calls, because I own 200 shares, I did 1 covered call, and if Mara decides to shoot up, I do catch that share appreciation, and perhaps I'll do another covered call. Now, let's transition over to the second lie, and this is more current with what's been going on, and that is IPOs always moon. So let's actually look at IPOs and what has happened. So a lot of traders do think that a second a new stock hits the market, it is free money, and you can make insane money, which can happen. Some IPOs do soar. So for example, my bullish one, I captured a lot of gain. Right now it's actually up 40%, but I got it when it was at its highest. I got a 200% gain. And Figma, a bunch of those all did really well. I unfortunately wasn't able to get that many shares when I was doing those, but they still did really well. Even Gemini, I wouldn't say this one did really well, but I captured like a 30% gain in just one day. But on the other hand, plenty of them actually do flop. So I think one that didn't do well was VIA. Let me actually pull up VIA, because when it first launched, it did struggle. So it was here and then it quickly dumped. But now it's actually up after hours, 8%. So yes, IPOs do work sometimes, but on a long period. So let's actually look at Figma or Klarna. Let's look at Figma. This one has been out for a little bit now, but in the past month, it is down 36%. So if you're doing IPOs, it's clearly showing that you don't want to go all in and you don't want to hold them for forever. Or you can hold them, but you can see that they don't always just soar. Something like Circle is one that did really well for a month or for a bit. Like it went up here the first day and then just continued to soar that following days or that following week, which is really impressive. But on the other hand, one like VIA or Figma might see some struggling. And I do plan to do more IPOs. We have one in flight for StubHub. Perhaps I'll do that one. But as of now, it's nowhere soon. It's in like 2 weeks. So I'm not really doing that right now. Now, the third and last lie, and again, this is pretty current with what's going on in the market, and that is everyone's a genius. Because right now we're in a bull market, everything is green, and it kind of feels like you can't lose. If you scroll through social media right now, it looks like every single trader is printing money, which is the case, but that is concerning. If everyone is winning, that is sort of a red flag for myself and other traders, because we do know the reality of the market and it does have those volatility. We are going to see some dips, and I do plan to buy the dips, but I'm not going to go all in because who knows? This market could quickly turn around, and bull markets hide mistakes because people think they're winning because of skill, but in reality, the market is just carrying everything higher. I'm going to pull up Open, and one reason I'm pulling up Open is not because I think it's a bad stock, but I do feel that if we weren't in a bull market, this would be a stock that would struggle. And we could totally see that for a year to date. It was struggling for the first half of the year, and now we're seeing soaring. Yes, it is from some recent news, but a lot of it comes from hype. A lot of this momentum, price momentum, is from hype, and that's very dangerous. Now, again, I'm not saying this is a bad trade or a bad investment, but I'd be very curious to see when volatility hits or we see some bearish momentum where this stock trades at. And that is why I actually do covered calls. So although my covered calls are red, having those covered calls do help on a hedging perspective in the fact that if the market turns against me and decides to go downwards and we're seeing more volatility, those covered calls will help. They're not going to fully hedge, but they should help. And I'll be very curious. We know crypto will probably struggle in a bear market, or all these risky plays will struggle. And I actually have some stocks that are pretty volatile. So Riot and Mara, I am aware that these might do poorly in a bear market. Or if we see crypto kind of fall off, these are ones that will also follow. And that's why I'm not buying Riot right now. I am simply just holding. I have 800 shares and I haven't made a purchase on Riot for quite a while now. Ever since April, I don't think I've purchased a single share, just simply selling options on it. So the real test does come when volatility hits and settling positions kind of turn red. And you shouldn't just think that stocks go up, because long-term winners know how to handle both bear and bull markets and not just ride the easy wave. So those are three big lies that people still believe. Selling options is flawless, IPOs always moon, and just everyone knows what they're doing in the market. I have fallen for at least one of these myself, but I've learned the truth the hard way. And at the end of the day, the market rewards patience, discipline, and strategy, not shortcuts. If you've fallen for any of these lies too, drop a comment. I'd love to hear your story. Until next time, peace.